Hi everyone. Today I am going to discuss about the topic dividend policy. As part of the executive financial function, dividend decision is one of the most important decisions that a financial manager has to take. The profit generated by a business after payment of taxes may be appropriated for different purposes. Since the shareholders are the suppliers of capital or owners of the company, they deserve the entire surplus of the profit after the payment of interest and taxes. The balance of profit is distributed to the shareholders and the amount so distributed is called dividend. In other words, dividend refers to the portion of after-tax profits which is distributed among the shareholders of the company. The profit which is not distributed to the shareholders or which is kept in the company for the future requirement is called retained earnings. Dividend is a periodic reward given by a company to its shareholders for the investment in share capital. Dividend is recommended by the board of directors and declared in the general meetings of the company. Dividend may be paid either in liquid cash or in the form of shares of the company. When the dividend is paid in the form of shares of the company, it is called stock dividend. Earnings distributed as dividend increases the income of the shareholders immediately. On the other hand, if the earnings are not distributed immediately and which is retained and invested in the business, it may increase the income of the shareholders in the future. Dividends are divided into different types such as cash dividend, stock dividend, scrip dividend, bond dividend, and property dividend. First, we are going to discuss about cash dividend. Commonly, the dividends are paid in cash. Cash dividends are declared and paid at the end of the financial year. After preparing the financial accounts, when the directors find that the company has the divisible surpluses and sufficient cash balance to pay dividend, they declare dividend to the shareholders. Therefore, it is called a regular or final dividend. Companies having huge profit may declare dividend in between two annual general meetings of the company. Such dividends are called interim dividends. The next one is stock dividend. Company with divisible profit but not having sufficient cash balance to pay dividend to the shareholders. Such companies may issue shares to the existing shareholders. This is called stock dividend or bonus dividend. The shareholders get bonus shares free of cost. Thus, stock dividend or bonus issue implies the conversion of profit into capital. The third one is scrip dividend. Instead of paying dividend in cash or shares, company may issue transferable promissory notes for the amount payable to the shareholders. Such promissory notes have a shorter maturity period. This is called scrip dividend. Scrip dividend is resorted only when the company faces liquidity problems, which means scrip dividends are generally issued when the company have the liquidity problems, when the company faces liquidity problems. The fourth one is bond dividends. When dividends is paid in the form of the debentures or bonds with a long-term maturity period and a fixed interest rate is called a bond dividend. The last one is property dividend. In some cases, dividends may be paid in the form of asset instead of paying dividend in cash. This is adopted normally in the case of liquidation of companies. Thank you.